Let's welcome our guests joining in on the show, Sandeep Wagle on the charts and Mr. Chokalingam joining in on the fundamentals. Sandeep, let me come to you first. After looking at the way we closed on Friday and how volatile the markets had been, even the India VIX jumping almost 20%, what does it look on the charts going forward, and how dented is the trader sentiment in your view?
Good evening, Ajay. Good evening, Aisha. I think we are on the verge of breaking the crucial 5500 support level, and once that is broken, for me the next support is 5400, which may not be broken in a hurry. It may take a couple of days, but there is a good chance that we may break that as well. And in that scenario, we go down to 5200 to 5180. That would be my next target. Well, it is quite possible that it can go down further to 4900, 4950, but as of now, I would restrict myself to 5200, 5180. And I think the banking space would lead the pack.
Chokalingam, how did you really look at the rupee? Because 62 to 61, 66 is the kind of range it traded in, despite the host of announcements coming in the last 10 days to contain the weakness in the rupee. They not seem to be bearing any fruit.
Certainly, it's going to be very tough for next at least 6 months, because you have to understand the problem in a perspective. Last 30 months, we allowed a free import of gold, and we ended up importing about $100 billion worth of gold in the last 30 months. Had we controlled even $50 billion, today it would have come handy. So I firmly believe that the opportunity lost is creating problem, because on the other hand, if you look at RBI, it doesn't have much dollar in its disposal. FY 2008 was a very unusual year for Indian economy. RBI bought $78 billion of $78 billion in the open market at a price around 40. But we already exhausted more than $55 billion in the open market. So RBI also doesn't have much cushion to play, and therefore the pain would continue at least for next 3 to 6 months, and we'll have to live with it.
Chokalingam, how did you really look at these two stocks, Hero MotoCorp, which is almost making a 52-week high at 2000, and Axis Bank, which is just falling off the cliff, shaving off 10% in a single trading session on Friday?
Hero Motor, it has, as you said, has run up in the last few months. I think it is fairly priced, considering the fact that the pain in the auto sector would definitely continue at least for another 1 quarter, if not for more than 2 quarters. As far as Axis Bank is concerned, because of the market downturn and lack of confidence in the market itself, I believe the investors are overreacting, to the development for the bank. And I firmly believe that it is fairly priced, and it is one of the most efficient banks in the country. And we had seen similar, fall about a year back also, when there was some news about lending going wrong in Malaysia. Now similar kind of panic is there in the stock. I firmly believe that this is one of the most efficient banks. It would come out of all the problems, and it would definitely reward the investors from this level.
Sandeep, what's the take on names like a Hero MotoCorp, because that was perhaps the only resilient one in Friday's trade?
Yes, Aisha, absolutely. The way it has moved up, we have been talking of this over the last couple of weeks. At 1800, 1820, we have been talking of a target of 2150, and we maintain that. Yes, at such times there could be a sideways move, there could be even a possibly 50-70 points correction. But I certainly see the target of 2150 coming in over the next few months or so. So for me, on every bit of a decline, I would buy Hero MotoCorp. I still don't think it has fallen substantially. 1950 to 1900 is my ideal level where I am more comfortable buying this stock for a target of 2150, keeping in mind the next 6 to 8 weeks.
The other one, of course, was Titan as well. A slew of brokerage downgrades, and the stock really got hammered. Be it a JP Morgan, a Credit Suisse, or a Goldman Sachs, they all disliked the stock. Let's just bring up the over the week chart as well for Titan. There you go. It's a huge gash of about almost 9%, and massive chunk of the selling really coming in Friday's session. Sandeep, how much more weakness for Titan on the charts?
Aisha, looks like a fall towards 215, 210. So from a current level of 240 can be sold at the current level, or on a little bit of an up move towards 250. Maybe a stop loss of around 258 to 260 would be safe. And I would look at a 215 to 210. That's a very clear 10% downside move from the current levels.
Technology also came back in focus this week as the rupee continued to remain weak. Of course, growth in US and Europe is also auguring well for this particular sector, but most of the managements we've spoken to have indicating 30 to 40% margin expansion for every 1 unit weakness to the dollar on the rupee. Chockalingam, out of the entire pocket, Tech Mahindra, of course, there are chances of being included in the MSCI, but HCL Tech, Wipro, TCS, Infosys, how do they stack in your view in terms of preference?
I would suggest hold on almost the entire IT pack. Investors who are holding, they should continue to hold because, as I said, 3 to 6 months there is going to be a lot of pain for the market as well as for the currency. So the entire IT pack would be a very defensive one. And within IT pack, we continue to buy stocks like Oracle Financial, Polaris, and CMC because many other stocks are already quoting at 52-week high. And we find a lot of value buying in these 3 IT stocks, and also some of them provide a very good dividend yield. So therefore, I would go for a fresh buying in these 3 IT stocks.
What also saw divergent trends was clearly the auto pack. So wherein Tata Motors global sales data actually surprised the street on the upside and the stock gained about almost 13% over the week. On the flip side, Maruti didn't have such a good ride. Sandeep, what is it that you would do with names like a Tata Motors and Maruti?
Well, to be honest, I was bullish in Tata Motors in the morning. Now, with the kind of sell-off that we have witnessed today, other than a Hero Moto, I don't see strength. But to be honest, it can be bought on a correction if you are an investor, not as a trader, because in this market nothing will be spared. For instance, a Tata Motor from 315 can come down to 295 or so. So I would use that to buy. I still maintain my positive view on Tata Motors. Maruti is not that positive. I would choose between the 2, Tata Motors and Hero MotoCorp. I am anyway bullish.
Chockalingam, Friday's fall, the extent by which we actually fell, and the participation from the large caps falling 8 to 9%. There was also some murmur on the street of a possibility of a sovereign, downgrade coming in on the Indian economy, with rupee continuing to remain weak, growth faltering, and yields surging to record highs. How much possibility would you assign to that kind of event? And if it actually happens, how would the market adjust to it? How lower?
I think the possibility is 50% because most of our analyst community were worried about fall of Europe and US all along. But, we saw Europe has come out of recession with June quarter GDP being plus 0.3%. Similarly, we see a lot of indicators being positive for the US. Whereas for a country like India, and on the other hand, we see a lot more negative macroeconomic developments. And options also limited for both central bank and the government. So therefore, there is a possibility. One cannot rule out to the extent of even 50%. And if it happens, yes, it is going to be painful. We can see another 10% fall in the market. In any case, I firmly believe that market is headed for a lot of volatility with negative bias for the next 6 months. And this is the time for the investors to, look at the entire asset allocation. Try to minimize the risk of equity investment by allocating not more than maybe 20-25% of the wealth in the equity. That is the only way one can mitigate the risk of investing in Indian equities till election time.
The net cost for importing gold is only going higher in our country. How does it impact the entire section of jewelry stocks and companies like Titan on a fundamental basis?
Definitely, they will be impacted in terms of lack of adequate availability because we believe out of $50 billion worth of gold import last financial year, almost 70-70% was consumed by the jewelry industry. So therefore, there is going to be a lot more pain. But maybe after 1 or 2 quarters, they would be able to manage because I firmly believe that due to the government measures, there will be a lot of recycling opportunity within the country as it is happening in the world. Only 2% of the demand is met by the new production. Otherwise, 98% is just circulating within the system. And that kind of situation should happen thanks to near total ban of gold import. So till that time, for next 1 or 2 quarters, definitely these companies will have pain, and the pain would also be accelerated because of the severe slowdown which we are seeing in the economy and the income level of the people.
Okay, let's also chat about what trading calls should you be looking to execute come Monday morning. Sandeep, what's on your watch list?
Aisha, I have a sell in Kotak Bank, stop loss of 640, target of 610. I have a sell in Coal India, stop loss of 266, target of 248.
Chokalingam, you've maintained that the markets will be trading with negative bias, though with a lot of volatility. But which are the stocks which you will be having on your radar, which on very sharp cuts one should accumulate in a phased manner?
I would suggest, something like JK Tire. It's a very long-term call. Minimum, 1 to 2 years one should hold. It's available below 2 PE, and the Mexican operations are doing very well. And one can also, since you mentioned a short cut, I would, advise even looking at ITC. In the last few weeks, we have seen, the falling from as high as 375 rupees to 320 today. So these are the two stocks, investors can consider, and quite defensive in nature, considering the fundamentals as well as the price level.
Okay, Mr. Chokalingam, Sandeep, good to have you guys on board with us. That's a wrap then in this edition of Your Trades. We'll catch you again with the markets on Monday morning on Trading Calls.